The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN just after 9 a.m. Eastern time as we kick off the trading week, and we got markets slightly in the red. But take a look at where we were on Friday, folks. Yeah, you have the S&Ps down 0.5% right now, but you're barely talking about a pullback. Friday's action all to the upside, and you're talking about basically 140 S&P points from where we were at about 4 in the morning. You opened, 8:30. We got economic indicators with some volatility, but we were almost near 37.80 at that price point, 140 points. So keep that in context as we get 20 points for a pullback right now in the S&Ps, but nothing compared to where we were on Friday's action. NASDAQ 100, you're talking about 500 points from early in the day on Friday to 11,600 almost to close out the session. We're negative by about 0.2% right now in the NASDAQ 100. Dow is off by 0.4, 33,003. And we're backing off a bit, down by about 143 from the close. And the Russell, negative by 6. How about the Russell trading up 60 points or more than that from where we were early on Friday action? Bitcoin, back above 20,000, 2760. We were just below that level at about 8:30 on Friday. Quite the charge higher. Bitcoin actually positive on the session. And crude getting a little bit of a pullback. Crude, not as much volatility as the market. You see the action on Friday when we had all of that equity action in the overall markets. This morning, we're down by $1.45. Gold continuing to struggle as gold's off $4.30. You got to jump to the dollar, and there's some strength for you, folks. We're at 111.36 in the dollar. You take a look at the daily. Okay, that's actually making its way potentially back within a channel line. We'll see how it handles. Our man Bud Rolfs used to say, folks, the channel king. You break out of that channel, that's not the sell or that's not the buy to the upside. What do? You let it come back and test that channel line. So the dollar index at a pretty critical area right now on a critical week in a big way. Fed with a meeting starts tomorrow. Decision 2 p.m. Eastern time on Wednesday from the Federal Reserve, expected to raise by 75 basis points. It's all going to be in the conversation and the rhetoric, in my opinion, in terms of what comes after the decision and what is said at the press conference and where is there any guidance. There's the potential for the market to get a little bit ahead of itself if the chairman possibly indicates that they might be willing to be data dependent, which means that they're not going to be on a hiking cycle that they have been of 75, 75, 75, et cetera. It's all going to come down to the data no matter what, folks. Okay, we got non-farm payrolls on Friday as well. We're going to get CPI data for the month of October within November before their next meeting. So they're going to tell you whatever they're going to tell you in terms of Chairman Powell on Wednesday. But keep in mind that 2 days after that, we find out the entire payroll for non-farm payrolls, wages, right? We find that all out on Friday. And then, of course, we're going to get CPI inflation data for the month of October as well. Now, something to keep in mind, okay, there's always a lag, but taking a look, let's put it on a daily, the crude chart. Because energy prices, folks, we came into October at $80. That's the last time we saw $80, folks. Okay, as in you're seeing no more weakening energy prices when it comes to crude, at least, in terms of how that's going to help the market at all. Because remember, the last numbers we got were September. September was versus August. Well, August crude prices were between about $95 and $87. And September prices started at 87, 90 was the cap, and made it all the way down to 76. So we're going to have higher energy prices for the October data when it comes to crude. We've had higher energy prices across the board, crude even going down, not translating completely across the board, but that's no longer helping us. Even with crude down $1.31 right now for the final trading day of October, okay? I just walked you through it, man. We came into October at $80. That's the last time we saw that price. And for the month of September, we came in at a price point of basically where we're at right now, and traded, accelerating from September 16th at $85. For the second half of the month, we traded from 85 down to 75. Yeah, so keep that in mind when we're going to get these October prices, because crude is not going to be as helpful as it has, and that's going to cause some problems on the inflationary front for the raw data that the Fed is dealing with as they go forward. We jump around. I mentioned gold. So gold's up. You get the dollar with some strength, gold with some weakness. We jump over to the euro for the currencies. Euro US dollar trading a little bit lower, back below parity, not quite to the channel line. Now, I just showed you dollar index, right? Actually coming back to that channel line. You could see the euro trade all the way to about 98 and potentially test that channel line. And the euro, man, it does not get much more well-defined than this channel, folks, in terms of the upside, the downside, how close each time it is. Oops, let's activate this one, because the only thing I could see that you could potentially is that maybe that's a little bit tighter, creating that like parallel, and you got a couple, right? But, man, that is a well-defined channel line. And for you euro bulls and dollar bears out there, yeah, look for that bounce in the euro at about 98, trading 99.13 right now, potentially, or you just drive right back into that channel. But there's a lot of talk about pivoting this morning. We're going to get to an article next talking about Morgan Stanley's Wilson. Let's jump to the pound US dollar. Yeah, different story there as the pound actually jumping off the top of its channel line. We jump over to the dollar yen. Dollar yen right now, no slowing that thing down, man. Dollar yen 148.63. Let's put it on a 15-minute, 5-minute. Yeah, just remarkable, man. From Thursday at 145, the yen pushing 149 yet again. You can't step in front of the truck of foreign currency, folks. It's too big of a market, even when central banks try to. Just too big of a market, and how it's tied to yields across the globe. And with that in mind, we jump to yields, and what do we got? We got lower price and higher yield coming at you as we come into a Fed meeting, folks. You get the 10-year down 9 ticks. That's correlating to a yield right now of 4.04%. The yield on the 10-year. You got the 30-year right now down 12 ticks, 120.28. Let's kick it off with the VIX. Volatility getting sucked out of this market in a big way on Friday to 25.75. And that's quite a little pop for not really a huge reaction in terms of where we were. Now, pay attention to what's going on here, right? You have the S&P trading. Let's back it up again to where we were at even. Let's back it up to even where we were at 10 in the morning. Okay, after you already got a huge acceleration. We're still 40 points above that price level in the S&Ps from where we were even at 10. And check out, I mean, the VIX was at 26, so we're elevated above that level, right? You have a VIX that's elevated with an S&P that's actually above the price point it was trading at when you have the VIX trading at about 26.60, made it all the way down to 25.80. You see the run, but guess what? The market, nope, they reset the premium to right where it was at the beginning of trading Friday, expecting some volatility, folks, is the point there for the VIX. As we come into a Fed decision Wednesday, non-farm payroll numbers on Friday. We're going to go over some of the earnings we have later in the program, folks. Peloton, one of the companies that's going to be coming out with their numbers this week. We jump over to the Analyze tab. They'll be out with their numbers on the Earnings tab. Is that Thursday, I believe, November 3rd? Yes, Thursday, Peloton will be out with their numbers. Only a $1 expected move, but only an $8 stock. But their CEO comes out over the weekend. Boy, what do you get? $168 million pay package, folks, to run that company and try and turn it around. Stay tuned, folks. S&P's negative 20. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&Ps negative by 19 points right now, trading at 38.91. We get the NASDAQ negative by 78 right now. Next article we'll jump into, they're talking about potentially 4150. That'd be 250 points above where we're trading at right now in the S&P. Morgan Stanley's Wilson, so he's been one of the top analysts out there. Indicators suggest Fed pivots sooner rather than later. And strategists see the S&P 500 rallying to 4150, which would be a 6% advance. Folks, it's 250 points from where we're at right now, but we just did almost 150 points on Friday alone. So if you really see some strong rhetoric out of the Fed, out of the chairman, that somehow they're willing to pause or something like that, yeah, we're going to get a takeoff, man, because this is a takeoff ahead of the takeoff, but there's still a lot of volatility of how things could not go as people hope, or market participants hope. The ending of the Federal Reserve's campaign to raise interest rates is approaching, and that's according to Morgan Stanley strategist Michael Wilson, who until recently was a prominent bear. Yeah, but he shifted recently, man. He was talking 4150 to potentially 4300. But part of this call, and this article doesn't go into it, I remember reading this last week, is that the market's just not pricing in the recession that they have to just yet. And that this is not a new bull run for years, folks. This is a run that's going to start as the Fed tightens. A recession potentially gets pushed back to 2023. You get the acceleration up to 4,100, 42, 4,300, and then you potentially get a pullback as the recessionary indicators for the economy start hitting stocks, earnings, margins, etc. You look at the rally that we've haven't had anything like this on a back-to-back basis since the beginning of the year when the hiking began. On a weekly change, we've had 1, 2, 3. You could make a case back in March that we had a couple there. Now that March, okay, that was after their first hike, those weeks. I remember because it was quite an acceleration, right? You buy the rumor, you sell the news. You, or in this case, you sell the rumor that the Fed is going to be again hiking in dramatic fashion. They meet March 15th, and you buy the news that they're actually doing it, and we got a rally from 4150 up to 4600. Now, interesting, I hadn't even pulled it up on the chart, right? 4150, yeah, we got up to this level in 4150, folks, and you're back to where this thing was on March 15th. Look at where that is. That's correlating to, number one, the lows we had originally on that first acceleration, almost correlating right to where we were on January 24th, okay? correlating to the price area we chopped around in May, correlating to a price area that we were at in May, correlating partly to where we were in August outside of potentially 1 week over that price level. 4,200 is going to be a critical area if we get there, folks. We're only 300 points away, and we are in a very big week in the market with the Fed meeting and announcing on Wednesday their note. This kind of price action is not unusual toward the end of the cycle, particularly as the Fed moves closer to the end of its tightening campaign. I kept thinking as I'm hearing so much rhetoric out today in terms of people saying that the reason this is happening, the indicators are lining up. They are now in a restrictive policy. They have reached that policy. They're not going to go 75 forever, man. Things become normal, right? 75 repeatedly 3 or 4 times is not a normal hiking cycle. It seems normal, and the market has somehow even accepted it at a price point of 38, 3,900, where we sit right now in Friday's action, okay? But that is an extraordinary hiking path that leads to restrictive federal open market committee policy, FOMC policy, okay? Eventually, we're going to have to reach the end of that, folks. The tough part is we have not seen much data at all that lines up that the impact they're hoping for is really taking hold. And inflation is so out of control that I feel like the market should be pricing in a little bit more volatility or a little bit more pessimism, because no matter what the chairman says, we're going to get some economic data that's very important, and there's nothing to say that that's not going to be disappointing. I was listening to Bloomberg earlier this morning, and somebody was saying, just remember how wrong the Fed has been, too, and just how difficult it's been to forecast. I mean, at one point, they're out there saying, number one, it's transitory, and that's an SNL skit laughable right now, right? Because it was so freaking wrong. SNL skit laughable. They were saying it for a year, the chairman himself, okay, until he acknowledged that, man, it's time to retire that term because it's not even close. They were talking about 75 basis points is not even close to on the table. What are we at, the 4th? 75 basis point consecutive hike? So spectacularly wrong, folks. And there has not been a huge reversal yet on what is going on. Okay, so keep those risks in mind. We have a two-way market right now going on in this. One of the other points I want to talk about, you had Goldman out there saying strategists said the potential downshift in the pace of the Fed tightening, coupled with light positioning in anticipation of strong fourth quarter seasonality, is behind the lift for equity markets in recent weeks. While Amazon fourth quarter seasonality, I don't know if that's going to be happening, man. 17 bear market rallies since the 70s. The S&P 500 rose by an average of 15% over 44 days. And that's Goldman strategist David Costin out there talking about. And they're talking about 3,700 as their trailing stop. That's Morgan Stanley. And and the bear market is likely to end sometime in the first quarter, though. So we're not at it, right? That was the key there. That was the article I was talking about. The bear market may end in early 2023. So maybe you get a run up and then you get another acceleration on real recessionary fears before, guess what? The Fed comes back in and they start cutting. My dad was talking about on the program on Friday, talking real estate, right? And talking about buyers. And he was saying he's got some buyers out there. If you didn't check out the program on Friday, it was a good one. It's always on our YouTube channel, folks. And he's buyers coming in, right? And they're in a good position. Okay, they have some cash, so it's not going to be a complete, a huge mortgage. But they're willing to pay the mortgage because, yeah, they'll probably pay the mortgage and then they'll refinance it, right, in 3 or 4 years. So you kind of shoulder the extra interest you're going to pay for 3 or 4 years. And then you hope to be in a better position in 3 or 4 years when, guess what, man? I mean, can you believe how well housing's holding up, folks, considering the buying power of the average investor has just gotten cut in a third or half, right? A year ago, you could buy X house for $2,200 a month in a mortgage payment. That same house is like $3,200 a month, man. So think about what would happen if that ever reverts again and the buyers come in. Not for everybody in terms of, signing up to a mortgage of that degree, 7% right now. But man, there are still buyers out there in a big way. Now, you talk about unforeseen impacts, recessionary impacts, negative impacts across the globe. Folks, Shanghai Disney, man, good luck to anybody traveling to China, but I would not be traveling to China probably ever. I just don't see it. As long as Xi's in power, man, and that regime is running things, COVID's going to be around forever. So you want to go visit Shanghai Disney, you're going to get locked up there. The rides will still be going, folks, but they're not letting you out, and that's a real deal. People have been told they will not be allowed out of the theme park until they can show a negative test. It's like, what does that mean? Does that mean if they're showing positive tests, they just got to keep riding Magic Kingdom rides or whatever it is? So this is zero COVID policy. They had 10 locally transmitted cases on Saturday, resulted in that. People are trying to flee. Those awaiting their freedom, almost said tongue-in-cheek here by the BBC, can console themselves. The rides are still going. Yeah. Pretty intense, folks. We'll talk a little bit more when we get back in terms of that and how that's going to play out, and we'll take a look at the Open and see what else we got earnings for the week, like I talked about with Peloton. Stay tuned, folks. I'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You're looking at an S&P opens negative by 23 points right now. A little volatility coming in right into the opening bell. You see it at that 5-minute bar. We trade lower, and then we trade higher. We're at 38.85 in the S&Ps. NASDAQ 100, 11,506. The Dow right now negative by 176 points. That's just about 0.5%. And the Russell off about 0.2%. We spiked down to 1838, and that's where we sit on the open in the Russell. Okay, jumping back real quick, taking a look at Disney. Disney shares actually a little bit in the positive this morning at 106.10. Yeah, so that Shanghai story is just something else, folks. We're 3 years into COVID, basically. Almost 3 years into COVID. They got 10 cases, and they're locking, tens of thousands of people. The park just went to diminished capacity a few days before that when they started getting cases, I think, in the area. They lock it all down and test every single person in there. Thankfully, America will go crazy if that was the case going on here, man. And just in the back of my head, too, think about, Xi's got things locked down, man, and nothing is happening over there in terms of an uprising. And I know nothing, folks. This is just my opinion that I'm spewing, right? But this type of stuff, it's pretty crazy and has the potential, I think. You lock things down too far, you pressure people too far. You got the Chinese stock market, stocks crashing because international investors obviously shying away from that type of action. That presents volatility potentially over there as well. Let's jump over to Peloton shares. So Peloton out with their numbers on Thursday. There's a lift for you, up 2.6%. Yeah, so it came out, and I think it was already out when I was looking. I don't know why. Maybe it was just a good old Post article, a New York Post article that I saw there. But, man, the new CEO, he's got a pay package, folks. Let me see if I have it up. I don't even know if I have the article up. I don't even need to have the article up. Do I? No, I don't think I do. It's to the tune of about $168 million. And where it comes from is you got an $8 million stock option back in February. Okay, now look at what's happened since he even came in. He came in February. And maybe this was the acceleration they got on their earnings and a whole reorganization with a new CEO or something like that. I'm not sure the exact day, but it was somewhere around here, okay? And so he got them at around $20, I think, which is the 20 times the 8 million shares. You're looking at about $160 million. They're only exercisable, though, above 37. Over a period of 4 years, they vest. So, of course, the case goes, if you almost double the share price over 4 years, you're not going to worry about paying the CEO $160 million. And he is a tenured guy, man, in terms of being on Spotify for a while. I think it was Netflix as well, right? He's 68, 69 years old, wooed him out of retirement, basically, to do this. But that's a lot of money over 4 years, man, and they got a big task ahead of them, and the company's only valued at $2.7 billion right now. It's a lot of money to take out of that shareholder value, even though the case is that you could possibly turn it around and run up to that price. I mean, folks, there's only 340 million shares outstanding, okay, and they just gave him 8 million, just like that. For public companies, it just seems obscene. It does. Okay. Let's jump around to what else we have, and let's jump back to the Fed. Dovish FOMC would see some traders scrambling to catch up, the survey shows. So check it out. We have the MLIV Pulse survey that if Powell gives any dovish signals during the week's profit, he might send investors scrambling. That's because 250 respondents last week said they were buying the dollar. Let me start over. Half of the 250 respondents said they're buying the dollar, and about 78% expected yields to go up for the 2-year. These bets, which have worked out well, it's going to be so interesting to see what happens, folks. We talk to our man Kevin Hincks every Tuesday, Wednesday, Thursday. We'll talk to him tomorrow. One of the things he says, and I like it right now, stay close, stay current. All right, you're seeing a lot of people who are talking about the worst fears in the market, right? People saying, what do you do then? Where do you go? Stay short term, man. Stay short term. Go get some short term yields. You can't go wrong there. Just like in looking at this scenario, okay, stay short term, because I just think there's a lot of volatility in the numbers. And anybody who's telling you with deep conviction what's going to happen, you have to know what's going to happen for non-farm payrolls and CPI and PCE and energy prices. You have to know what's going to happen there to know what's going to happen with the Fed. And I pause for a second because, of course, you got to know what's going to happen with the dollar. You got to know what's going to happen with yields, right? But if you know what's happening with inflation, and nobody does, remember that. Not a single person knows what's going to happen with inflation in certainty with over a period of 3 or 6 months or whatever. But unless you know that, you can't know where the dollar and the yields are going to be, man, because if inflation is raging like it has been and overshooting everything as it has been, I just went over the energy scenario, right? Crude is not being any help recently Whereas on the headline numbers, crude's been one of the more helpful factors over the last 2 or 3, 4 months. Not happening anymore. If anything, we might see crude actually start being more of a problem. I was reading something that was talking about the weather. Let me see if I have this one up here. There's a lot of news to kick off this week, man. Let me see if I can find it. Let's see. Is that it? No, that's not it. It was talking about, and take this for what it's worth in terms of talking about weather, but it could be a little bit colder than normal, and this is some type of weather report out, a little bit colder than normal, potentially winter in Europe. Not what you want to hear, man, for energy at all. Now, I don't know how you forecast weather 3 months out. I don't know what the confidence interval looks like when you're trying to talk about weather 3 months out, but that is not helpful, to say the least, across the board. I think that was all we had in here. Yeah, where the 2-year-olds are going to peak by the year end, you got professional in black and retail in the pink here, above the current levels, but below 6%. A lot of market participants, right, looking for yields to go up from here. At or above 6, 8 to 15, they've already topped out. You're only looking at 20 to 23. So if you get a real turn from the Fed, and I don't know how you do. If anything, it would be something like, what was it, the June meeting or so, where they, it was this, where somehow they just said they were going to be data dependent, and the market read into that they're not on a hiking cycle, that they're going to continue. And here we are coming into November, folks, and they're still hiking by 75 basis points, right? Think about the rhetoric around that meeting, and all Chairman Powell said was we're going to be data dependent. He said more than that. Okay, I think he wishes he said a little less or a little different wording. Instead of allowing the market to go from 3,600 up to 43.39, and then we got a couple CPI prints that blew things away to the downside. You accelerate lower down to new lows of 35.02, and on a Fibonacci basis right now from that level, right at the 50% from the spike. If you take kind of that consolidation low from late September and where we were for a good 6 days, basically in the middle of October, you're just above that 382, which is 38.73, folks. You're within 15, 20 points of that 382 price level. Also correlating to kind of those September lows at a price point of 3,900. So 3,900, that's an important one, man. Right where we are right now as we got the S&Ps down 19 points. So the Fed starts tomorrow. They have their announcement at 2 o'clock on Wednesday Eastern time. They have a press conference at 2:30, and then we get non-farm payrolls on Friday. Let's see how the VIX is trading right now. VIX just sitting under 27 at 26.92. We'll jump over to the dollar index. Dollar index right at that line, that channel line, 111.39. Stay tuned, folks. We'll go over some of the other companies with their earnings this week. We'll be right back after the break.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps right now, kind of right where we started the session. 38.90, down 21 points. NASDAQ 100, a little bit lower. You're off by almost a full percent right now, negative 119. Dow catches a little bit of a bid. You're only off a third of a percent in the Dow and only off a third of a percent in the Russell as well at 1844. So we talked about Peloton. Peloton, they're getting a little bit of a lift. You're up by 2.7% to kick off the trading week. And yeah, look at that chart though, right? 666 on the low. Does that number have any significance? We're sitting at 823. You're up by 2.6%. So they're out with their numbers on Thursday. And look at that. $1.35 is priced into the action on Thursday. Now, that's just talking about an event, okay? But $1.62 is the volatility premium of the expected move implied in either direction for the options expiring on Friday. You have an $8 stock, $8.24 now. And you're talking about a 20% move in either direction. Boy, you jump down to the bottom side of that move, man, and you're pushing all-time lows for Peloton shares. Interesting, the executive, the CEO, he's got to get it back above 37. He almost got it. He did get it above 37 probably when they announced his tenure, and things reversing pretty dramatically. Almost got to push that thing fourfold now in the next 3 years as those options look to vest in 4 years with 8 million shares out there, but up 2.5%. For Peloton, we got Uber out with their numbers tomorrow before the bell. We jump to Uber, a little bit of an acceleration, man, out of the gate to 26.96. They're down 2%. You jump over to Uber, that's a decent move for you, man. You're talking about same weekly options, okay? About a $3 move for the weekly options. Now, what's so cool, folks, is this market maker expected move on the Thinkorswim platform. I mean, Kevin Hincks has talked about it, explained it many times. He does a better job than I. But it has to do with the forward month has a higher implied volatility than the next month. That's indicating an event is taking place. Because of that, rightfully so, you have earnings, more implied volatility, and then the mathematical work behind the scenes tells you how much of the move is priced in for that event that is taking place versus just the normal premium that's priced in for time that goes forward. Okay, so for that one event, about 264, but it's pretty easy sometimes if you just look at the implied number on whatever weekly option you're trading. That's a good indication, though, how much volatility is going to get sucked out the moment we know the earnings, right? And we get Uber earnings, I believe, Tuesday? Yes, Tuesday before the bell, so tomorrow before the bell, we get Uber earnings. I believe we get Pfizer before the bell tomorrow as well. Let's jump around. Pfizer. Yep, they're going to be tomorrow before the bell as well. And we take a look at, they're talking about a $1.80 move. So yeah, not quite the volatility, right, of something like a company like Uber. We get Eli Lilly tomorrow before the bell as well. After the bell tomorrow, AMD going to be one of the big ones. They're out with their numbers after the bell tomorrow. You're looking at about a $4 move for a $60 stock. We take a look at this thing, quite the acceleration for the chip stocks on Friday. On a daily basis, though, pretty well-defined channel line. You broke above it in July, got back within it in September, and we're just inching towards kind of the upper boundary line of that channel line. These chip stocks, man, AMD 164 to 60. Whew. NVIDIA 346 to 108. NVIDIA down about 2.3%. Market's catching a little bit of a drift to the downside right now. NVIDIA, AMD, Intel, that's what I want to pull up. They had the huge day on Friday. Intel down about 1% right now. There was your action on Friday following the earnings for Intel on Thursday, and they give back some of it as the market gives it back. NASDAQ 100 off 1.2% today. But just for some context, folks, we had such a big move, man. The 382 is still below where we're at right now, 11,413. That's if you take it from the low, folks, the spike at 8:30, also correlating to the low of Friday morning, coming into that 382 in the NASDAQ. Taking a look at the S&P, similar Fibonacci basis. Yeah, you just got through the 236 basically. 3869, so about 15 points below where we're at in the S&Ps gets us to the 382. That's just a Friday's action. Okay, taking a look at what else we have for earnings, because it's a big week, along with a Fed on Wednesday and non-farm payrolls on Friday. We got Airbnb numbers. They're out with their numbers after the bell tomorrow. Look at this acceleration, man, right out of the gate. Some of the companies that are reporting, Airbnb, they're reporting down 5.4% out of the gate. Uber, they're reporting down 3% out of the gate. Interesting, to put it lightly. So Airbnb, they're trading down 5.5%. You jump over to the Analyze tab, there's a move for you, almost a 9% move for Airbnb for their numbers after the close tomorrow. And Airbnb, they're looking for $2.85 billion in revenue. The previous quarter, $2.24 billion. Yeah, and they've been super volatile recently, man. And I say recently over this, 3-year weekly. 219, 140, over 200 again. Demise to 86, and looks like it's chopped around between about 100 and 120, but you're off $6.24 as we got some negative action right now in these markets. You jump over to the VIX. Interesting, as we've had a little bit of a sell-off on the open, the VIX holding at about 26.89 right now in this market. Let's see how the dollar's moving right now out of the gate. Dollar continuing strength, up 70 ticks at 111.45. The euro right now, 98.99. Dollar yen, let's check it out. Continuing to rise at 148.73. Crude catches a lift. Look at that. 9.30. Crude trades up almost $1 on the open. And gold sitting down about $4 where it's been. We check in on yields right now. The 10-year sitting kind of right where it was. Okay, jumping around to other stocks that may catch your eye this week. Roku. They're out with their numbers, what are they, Wednesday after the close. Jump over to the Analyze tab. Yeah, there they are, November 2nd. And there's some volatility for you, folks. You jump to the weekly options, almost a $10 move priced in for these weekly options, folks. And the stock's trading at 55.20. Boy, you talk about demise. You got to keep going back to find that double top at almost $500. And you lose 90% of your value at 47.27. You're sitting at 55.70. And keep in mind, and this is why if you don't trade options, it's important to understand them, folks, because they can help you with equities. Because if you're holding this equity, okay, the market's telling you, hey, we're going to trade maybe $10 one way or the other when they come out with their numbers Wednesday after the close. So you better be ready for a price action between $45 and $65. If you are trading options, maybe you want to sell some premium. If you are trading options, maybe you think that's light. Maybe you think this thing has the potential to really pop if they can turn around their business. But boy, they're in the advertising business as well, folks. And advertising, not a good business to be in right now with people trying to tighten the wallets in a big way. And we'll jump over to Peloton as we wrap up this segment to take a look at their numbers again. Peloton, you're up by about 1.7%, a little bit of a pop on the open. And again, they're talking about almost a 20% move as well. So $1.60 on an $8 stock for their numbers. So we get some decent volatility in specific equities that have just gotten pummeled, man, even with the VIX trading at 26.93. And this market's fading. We're now below anything that we were talking about in the pre-market, and we're at 38.77. And what did I just tell you on the S&Ps? We're talking about a Fibonacci, the 382 coming into that area, only 5 points away at 38.71. Stay tuned, folks. One more segment. We'll be coming right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps negative by 32 points right now. NASDAQ 100, you're off 162. The Dow off 220 right now. I got a chart of win up here on a monthly chart, folks. Okay, this is going back all the way to 2004. Today, it's up $5.56. That's a 10% pop. As you have Tillman Fertitta. I should know his name. He's the Houston Rockets owner. He has the show on CNBC, right, doing different things. Nonetheless, he bought 6.9 million shares, so he's got a 6.1% stake in Win, according to a 13G filing when you go over 5%. And, you know, I pulled it up on the monthly because that's not a bad buy, man, $60. Look at this monthly, right? Yeah, you were way below there in 2008, but that's the only time because I said to myself, man, what are you doing? Because Win's got a lot of exposure over in Macau. They have exposure to China, and I just told you that China's zero COVID policy locking down everything, but there's your pop, man, as he's buying up, 6.1% of the company. Okay, jumping back to some of the other companies out with their numbers this week, because it's a big week, man. My screen just jumped away from me. Let me get back to the point I was in. Okay, Wednesday, companies I haven't even gone over yet. Wednesday before the bell, you got CVS, you have Paramount, you have Yum Brands. After the bell on Wednesday, eBay, and these are just some of the many. Etsy, Qualcomm, Robinhood, Roku, out with those numbers as well. Thursday, we get Cigna, Kellogg, Moderna, Papa John's, Peloton we went over, Penn Entertainment. Let's take a look at Penn real quick. That stock, man, gambling stocks. Penn down about 0.25% today on a daily basis, 32.67. DraftKings out with their numbers Friday before the bell, sitting at about 15.20 right now. We get Shake Shack on Thursday before the bell, Under Armour, Wayfair, Carvana, Coinbase. Man, it is a big week. And these, I'm just cherry picking, folks. PayPal, Starbucks, Yelp. Yeah, so it's going to be a big one, folks. Not to mention Fed on Wednesday, non-farm payrolls on Friday. I appreciate you tuning in. Starting the trading week off, folks. Negative action to kick things off, but we got a two-way volatile market right now. Basil Chapman's up next, folks. See you tomorrow. Have a great Monday.